Hey, what's up, everyone? Today is November the 28th, 2018, and we are doing our free video here in our daily market analysis. Fascinating day. Simply put, a fascinating day here for us to take a look at. Okay, so let's start here in the spiders. Take a look, which is what we always do, and take a look at this after incredibly weak candles, right? Weak candle, weak candle, weak candle, weak candle, even though it's green. Bam, 3 bullish candles, and then a crazy bullish candle here for a total of 2.3% today. This candle is really interesting and I think pretty significant for a couple of reasons. One, we closed over this 9 EMA, which gives, for me, the advantage back to the bulls here. Advantage back to the bulls. And then 2, we are right up against this trend line. Okay, so this trend line is now going to act as resistance, and it did act as resistance today. I think a lot of people are probably drawing a similar trend line right now. These technical analysts are probably drawing a very similar trend line here. And we also are challenging this 200-day simple moving average. Okay, so what's going to be really interesting to see is if we can get above this 200-day simple moving average and close above it. Okay, and if we can close above the simple moving average, then that is going to give us a indication that maybe this dip might not be as long-term as some of us perhaps suggested that it might be. And so we're really going to watch to see this trend line and this 200-day simple moving average. Now, interestingly, you're going to see that in very similar. So close above the 9 EMA, and these are our Qs. And those of us here at SellThatOption.com are playing the Qs bearish right now. And so this $5.26 move means that even though we haven't hit our break evens yet on this position, and we would still receive at expiration 100% of the credit that we've received if we were to let it go to expiration, it means that right now the position's a little underwater. So we are right here going to challenge this trend line as well, which is now well below 170. And then we also see here that we are looking for this death cross right here. Okay, so we're looking for this death cross, and we're going to have to see what happens here with this death cross, okay? And so we're just going to have to play it by ear and really see what happens. Okay, so let's move to our diamonds here, and we're going to see a little bit different of a story here in the diamonds. We actually closed above the 200-day simple moving average. So we closed above the 200 simple moving average. We are still below a trend line here that we have drawn, just trying to help us out a little bit, but we are under the 50 simple moving average. And so let's kind of watch what happens here. We closed above the 200, which is certainly a bullish indicator. And then finally, let's go to our small cap. Again, interestingly, this trend line acted as resistance again. This is our leading indicator. So let's see, or leading indice. So let's see what happens. Is this trend line going to continue to act as resistance? Or are we going to continue to squeeze, right? Especially over the last month and a half or so. Are we going to continue to squeeze this triangle, right? This channel, because we're in the channel, down, hit the channel, up, down, up. So let's see what happens here. We might get a breakout one way or the other here, and let's see what happens. Could be a breakout to the top, a breakdown to the bottom. Okay, in the VIX is interesting. We've had what really looks like our 6th straight day of losses here in the VIX. And so I'm going to count this day right here, this 23rd, a loss, even though it was technically up that day. We lost 53 cents in the VIX, or 2.79%, and our VXX continues to lose. Just 6 days ago, we were at 40. Remember, for those of you all that are members here, we got assigned 100 shares here as part of at least my particular strategy I got assigned 100 shares at 38, and that position now is already at 34.79, which does look pretty good right now. So 100 shares, we're up a couple $100 already in this particular position based on the strategy that I like to employ with the VIX. Okay, let's go to our premium ETF selling charts just to see if there's anything here that is interesting to us. EWZ had another really solid day, so let's bring up EWZ. It's been one that's kind of been on our radar a little bit. So we saw EWZ lose a couple percentages, and then we saw it gain a couple, and then gain 2% today, or 78 cents. GDX had another interesting day. We've also been talking a lot about GDX. Yesterday we lost a bunch, and then today we had a totally bullish engulfing candle. So a total bullish engulfing candle. So we will just continue to watch that, probably trade it neutrally. Going through, oil had another interesting day. So as you all know, I've been really talking a lot about oil. So let's go into oil. Yesterday I was really watching. We'd seen what really looked like a bottom beginning to form right here. But one of the things you heard me say yesterday is don't trade what you think you're going to see, right? You want to trade what you are seeing. And so we didn't see even an update, really. We didn't see an update, nor have we seen this whole indicator move, okay? And I'm going to jump into this particular trade. I think, and again, I don't know this, and this is certainly not financial advice, but I think that I'm probably going to make some type of move, right, when we begin to see this indicator change. But we have another what looks like, is this a 52-week low? Yeah, so we have another 52-week low. Previous 52-week lows were in the 11s here. So we're seeing another 52-week low. Not a ton we can necessarily do here, but certainly worth taking a look at, and really would like to see some type of indication as to at least to stop this bleed here. What's interesting though is you see USO have a down day, and then you go to something like OIH, and we had an up day in OIH. That's a terrible looking chart. There we go. An up day in OIH. Okay, so we had an up day in OIH, but a down day in oil. We had a down day in oil, but an up day in XOP. So another up day in XOP. And then do we have XLE? XLE, we had an up day too. And so in our oil-derived ETFs, right, we had up days, but in oil itself, we had a down day, which shows that there's some level of divergence there, right? And so there's some level of divergence there, and this is important because we can potentially say that money's coming into OIH, XOP, XLE, these oil-related ETFs, right? But oil still had a down day, and so there's some level of divergence. So I think that potentially we can expect that divergence to kind of resolve itself. Okay, so we're going to certainly take a look at what that divergence kind of means, So here are our ETFs worth mentioning. Of course, oil derivatives, EWZ, GDX are some of the ones that are particularly interesting to me, in addition to just a really bullish day in the markets. Before we move on, let's take a look at futures. So here we are in our futures. You can see that VIX is up right now because our futures in the Russell, gold is down, NASDAQ is down, but marginal change, right? So we're only seeing 0.2%, 0.2%, and 0.14%. So at least in our futures, we're not necessarily seeing a ton of movement right now. So it'll be a continued interesting week. I told you that I thought coming into this month that the rest of the year is just going to be really interesting. I think it's going to be really fun to watch So if you do have any questions, please feel free to reach out to me. I am the head trader here at SellThatOption.com, and we'd love for you to check us out. So I hope you're doing well. Have a great rest of your Wednesday evening, and as always, stay humble, stay hungry, and here's to our success.